Hi everyone. While everyone's panic selling after Fed uncertainty, institutional money is quietly flowing into 6 boring ETFs that most retail investors completely ignore. Here's what blew my mind when I saw the data. These 6 funds have attracted over $180 billion in fresh money, while smart money positions for the biggest opportunity in a decade. Problem number 1, you're betting everything on Fed rate cuts. Here's the thing most investors don't realize. If you're chasing rate-sensitive stocks, you're making the same mistake as 90% of retail investors. The market priced in 87% odds of September rate cuts. But here's what they missed. Quality dividend growers and low-cost index funds historically outperform during both rate-cutting and rate-holding cycles. Solutions for every level. Beginner, stop timing Fed decisions. Build a foundation with SPLG at 0.02% fees. Intermediate, add defensive dividend growth with SCHD's 3.74% yield and 13-year streak. Advanced, implement the institutional 6-fund core that works in any rate environment. Problem number 2, your portfolio has zero inflation protection. Here's what's crazy. With core inflation still above the Fed's 2% target, most portfolios are losing purchasing power even with gains. Energy exposure, international diversification, and real assets are the only proven hedges. Solutions by experience. For beginners, VT provides global exposure including emerging markets benefiting from dollar weakness. Intermediate, SCHD's energy overweight positions you for inflation protection. Advanced, BRK.B's $340+ billion cash war chest lets Buffett buy inflation hedges for you. Problem number 3, you're paying excess fees during volatility. 89% of actively managed funds underperform during volatile periods, yet investors pay 0.75% plus in fees. Meanwhile, QQQM offers identical NASDAQ 100 exposure to QQQ, but saves you $50 annually per $10,000 invested. Multi-level approach. Beginner, calculate your fee drag. You'll be shocked at the numbers. Intermediate, understand why 0.15% versus 0.02% compounds to $47,000 over 30 years. Advanced, build the 6-fund core with weighted average expense ratio under 0.08%. Here's what blew my mind when I analyzed institutional flow data from September 2025. Markets priced 87% odds of Fed cuts, but institutional flows show smart money preparing for both scenarios. Defensive positioning through quality funds. SCHD maintains 3.74% dividend yield with quarterly distributions. September ex-dividend positioning for December payout. QQQM posted 13.57% year-to-date returns through September 8th, outperforming large growth category average of 10.67%. SPLG shows massive institutional preference over SPY, $30.55 billion in annual net flows versus SPY's decline. VT delivered 15.94% year-to-date performance, beating global category while providing true international diversification. BRK.B trades near $493 with 52-week range of $438 to $542. Buffett's massive cash signals major opportunities ahead. The September Fed data is particularly revealing. While retail investors bet everything on rate cuts, institutional money knows quality dividend growers like SCHD delivered 73% lower volatility during Fed uncertainty periods. Now, before I show you the exact allocation strategy that beat Fed uncertainty, I need to address something limiting serious investors. The internet today isn't as free as it should be. Content gets blocked by location, websites track your moves, and managing multiple accounts, you'll get flagged. That's why I want to tell you about GoLogin, the ultimate anti-detect browser, giving you complete control over your online identity. With GoLogin, you can access any website regardless of geo-restrictions, browse with complete privacy, no tracking or fingerprinting, manage multiple accounts without logging in and out, share secure profiles with your team, get 2 GB of free residential proxies for fast, reliable connections worldwide. GoLogin is like a regular browser with tools for multiple accounts. Create unique profile and choose the location. Share the account access with your team. Organize accounts with folders, statuses, and notes. 24/7 real-time support included. This anti-detect browser for managing multiple accounts on a single device without the hassle of receiving block access or dealing with tedious transferring of passwords is going to be very helpful for you. Whether researching international markets, managing accounts, or wanting online freedom, GoLogin has you covered. Check the link in the description below. Solution presentation, the Fed-proof 6-fund strategy. Here's the institutional grade portfolio that crushed Fed uncertainty. 40% SPLG, SPDR portfolio, S&P 500, ultra low-cost foundation working in any rate environment. Current performance, strong institutional flows continuing post-Fed meeting. Fee advantage, 0.02% versus 0.09% for SPY saves $70 annually per $10,000. Smart money signal, massive preference shift from SPY to SPLG, accelerating 20% SCHD, Schwab US dividend equity, the Fed uncertainty crusher. Current yield, 3.74% with next X dividend expected late September. Inflation fighter, energy sector overweight provides natural inflation hedge. Fed-proof track record, 13 consecutive years of dividend growth through multiple Fed cycles. 15% QQQM, Invesco Nasdaq 100. Quality growth without the premium. Year-to-date performance, plus 13.57%, beating category average by 290 basis points. Cost advantage, same holdings as QQQ, significantly lower fees, institutional insight, technology exposure without growth stock premium pricing. 10% VT, Vanguard Total World Stock, global diversification that matters. Performance, plus 15.94% year-to-date, outperforming global averages. Dollar hedge, natural protection against Fed-driven dollar volatility. Coverage, 9,000 plus global stocks providing true geographical diversification. 10% SCHG, Schwab US large cap growth, profitable growth companies only. Quality screen, eliminates unprofitable momentum, plays crashing during Fed uncertainty. Focus, fundamentally sound growth companies with actual earnings. Risk management, lower beta than pure growth indexes during volatile periods. 5% BRK.B, Berkshire Hathaway Class B, Buffett's Fed uncertainty playbook. The current price, $493, offering value entry below 542 highs. Ultimate hedge, $340 billion plus dollars. Cash gives Buffett maximum flexibility. Track record, 19.8% CAGR since 1965 through every Fed cycle imaginable. Fed-proof implementation strategy, Week 1 lock-in defensive core with SPLG, 40%, and SCHD, 20%. Month 1, add quality growth with QQQM, 15%, and SCHG, 10%. Month 3, complete diversification with VT at 10% and BRK.B at 5%. Fed uncertainty risk management. Maximum single position, 40% prevents concentration risk. Rebalance when allocations drift 5% plus from targets. Dollar cost average during FOMC weeks to reduce timing risk. Focus on total return, not yield chasing that destroys NAV. Here's what you need to know about the current environment. While covered call ETFs experience NAV erosion during volatility, these 6 holdings have structural advantages. Rate environment agnostic. All 6 funds delivered positive returns across multiple Fed cycles. Quality focus. SCHD and SCHG screen out zombie companies crushed during uncertainty. Fee protection. Ultra low costs mean more money compounds for you, not fund managers. Global hedging. VT provides natural currency and geographical diversification. Cash opportunity. BRK.B's massive cash becomes more valuable as opportunities emerge. The key insight? Stop trying to predict Fed moves. Build a portfolio that wins regardless. Here's my bold prediction for the next 12 months. This 6-fund portfolio will outperform 85% of actively managed funds while delivering low volatility than any single factor bet on Fed policy. Why am I so confident? The institutional flow data doesn't lie. Professional money managers are abandoning Fed timing strategies for quality, low-cost, diversified approaches. The September Fed uncertainty has passed, but the real opportunity is building wealth that works in any environment. Target performance metrics. 12-month total return, 12 to 18% regardless of Fed path. Maximum drawdown, under 12% versus 25% plus for rate-sensitive plays. Sharp ratio 1.3 plus top decile risk-adjusted performance. Free drag under 0.08% weighted average versus 0.75% plus for typical portfolios. The Fed uncertainty is your opportunity. While retail investors panic over every Fed meeting, institutional money builds generational wealth through boring, diversified, low-cost strategies. Your Fed Independent Action Plan. First, stop timing Fed decisions. Build quality positions working in any environment. Calculate your current fee drag. You're probably paying 5 to 10x too much. Implement the 6-fund core gradually. Dollar cost average over 60 to 90 days. Set quarterly rebalancing reminders. Maintain discipline when others panic. The choice is yours. Keep gambling on Fed predictions like retail investors, or join institutions building wealth through proven diversified strategies. The bottom line, while everyone debates the next Fed move, smart money builds portfolios that win regardless. These 6 boring ETFs have delivered through every Fed cycle, and they'll deliver through the next one too. This content is for educational purposes only and not personalized financial advice. Consider consulting with a financial advisor for strategies tailored to your specific situation. Please like, share, and subscribe. Here's to your investing success, profitable investing.